Hello everyone, and today we are going to break down the MACD strategy, one of the most well-known indicators in trading, which helps you better understand the strength of a move and spot possible entry opportunities. And in this video, I'm not just going to cover the basic theory. I want to show you a practical approach, how I personally read MACD signals, what matters to me before entering a trade, and how the strategy performed on a real trading platform. And we will also go through 4 successful trades separately, so you can see how the indicator looks not in a perfect textbook example, but in a live market. To put it simply, MACD helps you understand whether a move is gaining strength or starting to weaken. This indicator is often used to spot shifts in a market momentum, continuation of a move, weakening of the current trend, and moments when the market starts changing its pace. So, MACD is useful not because it predicts the market, but because it helps you better see its rhythm and direction. When I use MACD, I'm not looking at just a signal line crossover. There are a few things that matter to me. And the first one is how the main indicator lines behave. If one line crosses the other and the move on the chart starts confirming it, that moment already becomes much more interesting. The second is the histogram. It helps show whether momentum is getting stronger or, on the contrary, starting to fade. And the third is price itself. Because if MACD is showing one thing but the chart is not supporting it, the entry becomes much less convincing. For me, a strong signal is always a combination of the indicator and price action, not just one element on the screen. Hello everyone, dear friends! Today we will be closing trades using the MACD trading format. One of the fundamental trading methods, just like RSI. Here I show my settings 12, 26, 9, these are standard values. Also, we wait 2 seconds for the chart to show us a new candle since we are on the 30-second time frame. The candle is not justifying itself, the body is too small for the base. That means we will open a buy trade. But also, RSI has crossed from bottom to top. The green line has crossed. This means that soon there will be an upward trend from the bulls. The bulls will soon start to dominate and the chart will go up. Also, this is signaled by a reversal pattern, bullish engulfing, which also engulfs the red candle and the green candle dominates. These are 8 seconds left until the trade closes. Now the trade will close in profit and we will log in the result of the first trade using the MACD trading format. So in the first trade, the signal started forming at the moment when the MACD lines began showing a shift in momentum, while price on the chart had already stopped moving as weakly as before. So what mattered here was not just the crossover itself, but the fact that the market started supporting that idea. And that made the entry look more structured and easier to understand. In this example, MACD helped highlight that the move was starting to change not only on the indicator, but in price itself as well. We continue our trading session using the MACD format. I have already opened a currency pair. We see an uptrend. We see 2 confirmed peaks. The MACD format is in the overbought zone, that is in one of the highest zones. In addition, the MACD histogram bars signal a reversal. Therefore, we open a sell trade, despite the fact that the market is in the overbought zone, that is in one of the highest zones. It also signals that the market will reverse. These are 2 green candles, 2 hammers, which have a small body and a large wick. This shows us that the chart will reverse and move in the opposite direction. In addition, you can notice how the MACD behaves at this moment. The histogram bars are gradually going down. They show that the market is slowly losing momentum. We take our profit $92 net. In the second trade, the combination of the histogram and price behavior worked especially well. Before that, the market didn't look very confident, but at the right moment, it became clear that momentum was building. MACD showed that quite clearly, and that was exactly what added confidence to the entry point. These moments are useful because they teach you not to rush and not to enter too early. And this setup is a great example of how MACD can be especially useful when a move is only just beginning to gain strength. We continue our trading session using the MACD format. Third trade. I begin analyzing the market. I see that MACD is in the overbought zone, which means that the bulls dominated the market. This is confirmed by a pattern consisting of a hammer and a large, strong green candle. This can also be called a bullish engulfing because the green candle has fully engulfed the hammer and reversed the trend in favor of the bulls. In general, this can be understood as follows. When a hammer forms, whether green or red, it shows that neither side was able to push the market in their direction or break the boundaries. In 90% of cases, the market will reverse. As we can see now, we take profit of $92. There was already a clear structure on the chart and MACD wasn't fighting it. On the contrary, it was confirming that momentum was still holding. And when you see that kind of alignment, the decision feels much calmer. It doesn't feel like the entry is based on guesswork. On the contrary, it looks quite logical. When MACD and price movement match in meaning, the signals feels much cleaner. We are now entering the last trade of today's trading session using the MACD format. Here we see a very favorable trend to enter buy trade. The first thing is that his histogram has almost faded. The most important thing is that the green line has crossed the red line from below upward. This indicates that MACD will show growth. Yes, this doesn't work in 100% of cases, but in 95% of cases, this indicator gives correct signals. That means when you see a clear crossover where the green line crosses the red line from below, you should enter a trade because it signals growth. The market is gradually coming back to life. You can see how the histogram or bears, as some call them, are slowly increasing. This shows that there is movement in the market. We take our profit $92 net. The fourth trade is an example of a more careful entry where MACD helped not so much to find a magic point, but to confirm the market direction at the right moment. Price was already moving with a clear logic, and the indicator gave additional confirmation that the move still had strength behind it. Trades like these are very useful for learning because they show the main idea. MACD works best when it is used as part of the analysis, not as the only source of decision making. So, to sum it up, MACD is a powerful tool for anyone who wants to better understand momentum, direction, and overall market conditions. It helps you notice where a move is starting to gain strength, where the market may be shifting its dynamics, and where an entry gets additional confirmation. In this video, we looked at 4 successful trades from the platform, and these examples clearly show that MACD works best when it is read together with the chart, not separately from it. If you learn to notice line crossovers, histogram behavior, price reaction, and avoid rushing into entries, then the MACD strategy can become a very useful part of your trading system. Subscribe to the channel if you want to learn trading in simple language, without unnecessary fluff and with real practical examples.